Hello everyone and welcome back. Now let me catch you up on what's actually been happening in these last 24 hours because currently there's a lot of noise but only a few things actually matter. Now the big story right now is still the US-Iran situation, and honestly that's what's driving almost everything you're seeing in the markets right now. So here's where things actually stand. Now talks between the US and Iran basically fell apart again after Trump cancelled planned negotiations over the weekend. And at the same time, Iran has come back with a new offer, basically saying, we'll reopen the Strait of Hormuz, calm things down, but we're not talking about nuclear stuff right now. And that strait, as you know, is obviously a huge deal, one of the most important oil routes in the world. So when that's disrupted, everything starts to ripple through the global economy. So right now, that situation is still unresolved. And there's a bit of a standoff, so no full deal and no real de-escalation. Now here's actually why the markets care about this. Because of that tension, oil prices have surged up again, back above $100 a barrel, even pushing toward $108 at points. And it's not just about the price, it's about the supply. So you've got reduced shipping through the strait, production disruptions in the region, and even estimates of millions of barrels per day being taken offline. So what this means in simple terms is higher oil means we have higher inflation, and that puts more pressure on economies globally. So it's like a chain reaction. Now, the part that gets interesting is that markets actually aren't collapsing, but they're also not comfortable. So you've basically got this weird split currently happening. So on one side, we've got AI and tech stocks are still being pushed higher, and that whole story hasn't obviously gone away. But on the other side, you've got growing macro pressure on oil, inflation, and geopolitics. So markets are kind of stuck right now between things are good versus things could turn very quickly. And now, on top of all this, we're heading into a massive macro week this week. Like, this is one of those weeks where everything actually hits at once. So we've got multiple central bank decisions, inflation data, big tech earnings. So right now, markets are basically in a holding pattern. So nobody actually wants to make huge bets before all that comes out, especially with oil sitting this high. Now, one more important layer to all of this is that the US is actually stepping in more aggressively in the oil market right now, boosting exports and trying to stabilize supply globally. So, weirdly, the US is becoming the kind of backup supplier while the Middle East situation is unstable. But that's obviously not a perfect fix. It just helps soften the shock. So, if you actually zoom out of this whole situation, it comes down to these three things. So, firstly, we have Iran and oil. That is the core driver right now. And if that escalates, everything else gets worse. And now, secondly, we've got the inflation risk coming back because of energy prices, obviously. And thirdly, markets waiting for central banks and earnings before making a real move. Now, honestly, the way to think about this is pretty simple. So right now, markets are balancing. So we've got optimism from tech and AI against real world risks from oil and geopolitics. And whichever one wins, that's probably the direction we will move next. Now, just before I let you go, make sure you guys check out Evedex in the description below, which is a fully decentralized exchange that I also use for all of my trading. So if you're looking to trade, or if you want to trade alongside with me, then look no further than that description box down below. So as always, make sure you hit that subscribe button to stay up to speed with the latest videos. Drop a like will be greatly appreciated. And thank you for watching, and I'll see you all in the next video.